Welcome back. You're watching The Market, and we have with us now Ashish Rai, who's the Group CEO of Aurionpro Solutions. Ashish, hi. You've been able to get us a good quarter-on-quarter revenue growth of 3.6%. How do you look at the revenue potential for the FY27, and what are the key execution tailwinds that you have going into the rest of the year?
Hi, good morning. Thanks for having me, first of all. Great question. We faced a set of challenges in Q4, which we came on your channel and we talked about, and we said we'll execute against it. It's great. Sequentially, you're right, we grew 3.6%. It's great to get the business back into growth, and we hope to power through the next few quarters. We said we will do a few things in terms of, one, refocusing on the set of businesses where we see demand, defocusing a little bit on the Middle East, where we saw some challenges last quarter, and I think it's still not fully come back. And we said, well, so the banking software side will focus on new markets, which we've done. Double down on data center side, which we've done, and we've announced some very strong order wins. They have to obviously convert in terms of revenue through the year, but that should happen over the next few quarters. And we see fairly strong traction in terms of both the pipeline getting built up and the order book getting built up, right? So I think the focus would be now to sort of just take this getting back to growth in Q1 and now power through the rest of the year and keep focusing on execution.
But Ashish, what about the demand environment per se, and especially in the Middle East? How's that holding out?
Yeah, so Aisha, thanks. The Middle East is I don't think you can say it's fully back to normal, right? But I think for us as a business, because we got a little bit too dependent on that side, I'm pretty sure it will come back. But we've pivoted away, at least from a sales focus standpoint, into other markets, and we are seeing success, in terms of really pushing the transaction banking stack, for example, in Southeast Asia, and on the data center side, transit side. So I think Middle East, I think will probably take some time to get back to normal, as we all know. But from a business standpoint, I think we've successfully sort of refocused, and whatever impact there is from it, I think by Q3 that will get normalized out anyways, right? So I think overall, the demand environment for each of the businesses, whether that's the AI native stack on the banking software side, whether it's the data center side where demand is really through the roof, as well as transit business going increasingly global, I think the demand environment seems pretty strong. We have to keep executing against it.
Ashish, I was looking at your margins. It's fallen 300 bips on a year-to-year basis and over 210 bips on a quarter-to-quarter basis. What's the game plan to bring back the margins?
Yeah, so some of it, I think, like we explained again in last quarter, so it's a bit of refocusing the business. Margin is a function of the business mix, as well as a function of the investments which we are expensing out right now for various reasons. As we all know, we're going through one of the most fundamental shifts that the technology business has seen, and we've really doubled down in terms of rolling out an AI native stack across the entire Aurionpro sort of software stack. So which means, for a couple of quarters, like we messaged, the investment on that side would remain elevated, but we are passing through a window of time where the opportunity for us is so large that it will be almost unfair to not invest against it. And the second part is the business mix again, which will change quarter to quarter, right? So I think we are going through a period of time where, as we messaged, we will have investment that will need to go in over the next few quarters, and slowly I think the margin will normalize with the business mix.
Right.
When do you expect investments in AI data center and platform capabilities to start contributing meaningfully to the profitability?
Yeah, so it's already contributing. Like, it's a question of business sort of growing over the next several years, right? Because these are multi-year cycles. I think every single part of it now is, whether it's the enterprise AI stack, whether it's the software stack, which has a lot of AI native components built into it, whether that's the data center space, which is again largely AI driven. I think each of these spaces, you already see a lot of meaningful contribution from the investments coming in. But the game is not to really sort of show one quarter to the next, what exactly that is. But idea is, can we get to a position of leadership in each of these spaces? Can we be really a top quality full stack partner for hyperscalers who are sort of setting up capacity in India. I think we're already becoming that. Can we be a top tier partner for AI native software for banking? I think we're already becoming that. And I think over the next few years, the results of most of these investments will show a lot more strongly. I think it's not that it doesn't show right now. So if you see Q1, the size of Q1 was what the size of the whole business was probably 4 or 5 years back. Right. So, obviously the business has grown very strongly, and a lot of it is thanks to a lot of investments we've made around IP and products. But the goal is to build out a global products and platform player that can take a position of leadership in these spaces. And I think that goal, we will progressively keep stepping towards.
And Ashish, what's the implementation timeline now, specifically when it comes to your large banking wins?
Yeah, so actually, I think the timeline-wise, it sort of it's not changed a lot, but it's changed a little bit, and I think that sort of varies with geography. So we saw extended timelines in the Middle East, which resulted in obviously delay in execution as well as delay in converting the order book to revenue, which honestly is the big challenge that we're trying to solve for right now. The order book is very strong, but how does the revenue conversion get accelerated? The second is, again, in some of the spaces like data center, we need to build the capacity to convert that revenue, which again, we've been working very, very strongly on. And I think, honestly, the team has done a fantastic job of scaling up, to sort of try to keep pace with it. I think implementation cycles get stretched a little bit. Middle East, it got stretched a bit more. And also because of the AI cycles coming in, sort of the scale of implementation that we are doing is slightly larger than what we used to do, right? So I think that probably stretches it maybe 10, 20%. So all the factors together, I think there is intense focus that we have as a business now on revenue conversion from the order book. So you'll see that progressively over the next couple of quarters, we'll hopefully be able to bring the implementation timelines down across the business in a few places.
Ashish, can you give us a sense of the the banking wins that you got this quarter? What is the kind of implementation timeline that you have, and how quickly they will start contributing to the revenues?
I think start contributing pretty quickly. Typically, I would say if you look at a banking project, the implementation timelines are 12 to 14 months. I think what we've announced over Q4 and Q1 will convert into revenue within this year. And then as we win, I would say a chunk of it will get converted, right? So it starts converting to revenue pretty quickly, especially license gets consumed immediately straight away at the time that we start the implementation. And then, typically implementation projects are 12, 14 months, and that will play out as it plays out.
Right. Okay, great. Ashish, good to speak with you. And thanks for your time as always.